Now, for the analyst, my guest today is senior trader at JMMB, Franz Moulton. Hi, Franz.
Hi, how are you? Good night.
I
Good to
am
you and your listeners.
good. I'm good. Is this your first time on the show?
Yes, it is.
Well, welcome to Taking Stock.
Thanks for having me.
All right, so today we're going to be looking at the foreign exchange market. So there are a lot of things that actually influence that market. The J dollar has been pretty stable since around COVID time and probably a little bit before. But what are the things that influence that market?
So, before we go into the influencers, let's just a quick little recap. Just affects just the movement of one currency to the next, and why we use why there's FX. It's just for us to buy goods and services. Really, it's really to move from our local currency to another currency. The base currency, which is the U.S. currency. That's the base currency. That's the world currency. That's the currency that most persons use. That's the tradable currency. So, there are other currencies. There's a euro, there's a CAD, there's a pound. But in Jamaica, we mainly use the US to do the bulk of our trading. Now, what influences that? Like any other market, demand and supply. So, I mean, Jamaica has been is a small economy, and we are heavily import dependent. We import a lot, whether goods and services alike. And for that reason, just like any other good, any other product, we demand heavily the US currency. So what we find happening is that for us as a small developing nation, we are heavily dependent on imports. So we have what we call a depreciating currency. Not anything alarming, but it's just the nature of our currency, meaning that because of the nature of our economy, the dollar tends to depreciate over time. Over the last 10 years, our currency had depreciated by 35%. As you said, over since COVID, the BOJ has been pretty active in the market, and as such, the currency hasn't depreciated that much. In the last year, there's a 1.9% depreciation. In 2022, there's an appreciation of 1.9%. So we find that the BOJ has been active in the market trying to manage our currency. So we have a floating currency, and what that means is that demand and supply heavily drives the market. But we have sort of managed floating currency where the BOJ intervenes just to where there are gaps to make sure that the dollar is priced where they believe it should be priced.
So would you say the BOJ has been doing a pretty solid job of that? Because the dollar, like you said, it's fairly stable.
It's fairly stable over the last couple of years. BOJ has been very deliberate, and because, as I say, because of the nature of our economy. So one of the factors, as I would say, is that we demand a lot of foreign exchange. We demand a lot of imports. There's also COVID, which was an external shock, and that affected our currency as well. So what the BOJ had to do was to intervene in the market just to shore it up, just to make sure that, it doesn't spiral out of control, because whether we like it or not, the currency affects inflation. And that's also a deliberate attempt from the BOJ to manage inflation, because the depreciation of the currency have a direct link to inflation as well. So the BOJ has been very deliberate as it relates to just trying to control that. But for the most part, the demand and supply of just our economy, and because we are so heavily dependent on import, that's the main reason why you find that our currency is a depreciating currency. And it has been depreciating over the last couple of years. And unless the nature of our economy shifts, where we are now exporting more, and the government has been trying, there's remittance that help us, and there's tourism sector that helps as well, but it's not sufficient. So what you find is that because of this high demand coming in from just imports, our currency continues to depreciate year over year. So now the BOJ doesn't have a problem with depreciation, right? What they have a problem with is erratic depreciation. So they want managed depreciation because a lot of persons base their prices of goods and services on how they can get the currency. So the BOJ see it fit to intervene. As a matter of fact, the last time they intervened was today. They intervened in the market with 30 million over the since the last year. Well, since January, they have intervened in the market with over 200 million, just to show you the volume of US that the BOJ is pumping into the
Oh,
market,
wow.
just to make sure that the currency does not free fall, so to speak.
So would you say the BOJ is artificially keeping the currency stable?
It, I mean, I want to be, I want to make sure that I'm not, try to be as diplomatic as possible. So what I would say is that it's more a managed approach. So demand and supply still dictates where the currency goes. And if you look at our balance sheet is saying that we import far more than we export. So what the BOJ is saying that, okay, based on that reality, we might have a free fall in what is happening with the currency. So they will step in from time to time, especially when there is a gap. And for the most part, they only step in when there's a gap to make sure that the currency doesn't free fall. So they do affect the rate at which the currency depreciate. But it's just to fill gaps for the most part.
But what does all of this mean for us investors? Because there was a time
So,
not too long ago, 5 years ago, a lot of people, what we would do is just hold money in a USD account
yeah,
and wait for
so
an
what
instant
so and that's also one of the reasons. That's also and that's a very good point. That's one of the reasons why the BOJ will also feel the need to intervene. Why? Because there are also persons who speculate on the currency. So you have persons who because they know that we have a depreciating currency, persons buy the US and they hold it. And when you hold that US, what you do is that you create a gap, and it's an artificial gap, because what the BOJ wants is that whatever is being bought is being sold as it relates to the US. But when persons buy and hold the currency, it creates an artificial gap that there is a shortage, and sometimes there isn't a shortage. So what it means for us is that, well, from the investing public, is that because of that gap, you find that the rate of depreciation is faster, is moving at a faster rate than it is supposed to be moving, and that no push the BOJ to intervene in the market, just to make sure that the pace of depreciation is at a managed level. So I mean, for the investing public, for the most part, I mean, what we'll find is that because depreciation is a direct link to inflation, and inflation means rising prices, I mean, that can affect our purchasing power, and how we can, I mean, or we can invest in whether stocks or bonds or other stuff, because I mean, we know the effects of inflation when it's too high.
So do you find that fewer people are now holding that money in US accounts, buying US just to temper against or to safeguard against depreciation?
Well,
Or
I
are
couldn't
people
speak
still
to.
doing it?
I mean, so the speculators are not going away, right? Because of the nature of our currency, and if you want to be safe, I mean, most persons, they are going to stay in the US currency because they feel as if you are safe right there. So the speculators won't go away any at all. But what you can do is if you can if you can temper the rate at which the currency is depreciating, then the incentive to hold will be minimized. So you find that especially since COVID, as I said, I mean, the rate of depreciation have been significantly curtailed by the BOJ, and that this would be a disincentive for persons who want to hold the currency for speculative purposes. So in my mind, if I was supposed to harbor a guess, I would say that, well, you know, there's less speculators in the currency right now, just because there's not a lot of volatility as before. And what speculators like is volatility, because volatility can jump in and jump out, but that's not the best thing for the economy, because for the most part, persons who want to buy US to buy the currency for goods and services, if they cannot price at a particular price based on where they see the currency is moving, then they are going to price with a buffer to factor in that erratic.
Sorry about that. Yeah, so we have a question and a comment from our viewers. Tiwi says, please remember that the BOJ also buys the USD from the market, and last financial year they had a net purchase of the US currency. And then Andrew has a question, says, so based on what you were saying about imports versus exports, then is the GDP figures real if the trading currency is being managed?
Well, I mean, it is real, and a managed FX market is not anything new to us. As a matter of fact, I'll go as far to say that most floating exchange rate have some level of management in it from that specific country's central bank, because especially in smaller economies that are heavily dependent on exports. So you find that central banks all over the world, just to make sure that, okay, persons can price properly, or they can price based on where they think, I mean, the currency is going to end up. They operate on a managed exchange rate regime.
Yeah, I have another question. I saw something about exports recently. I was trying to look it up. Interesting question coming from Javon online. Javon says, wants to know, what is your view on BRICS and the lifespan of the USD going forward?
Well, I mean, that's a very good question, Javon. But the lifespan of the US going forward is not going anywhere soon, in my opinion. If you look right across the world, I mean, that's still the dominant currency. I'll go as far as to say that if you're buying goods and services, even in those BRIC nations, they still heavily use the US dollar to trade. So I don't think the US is going anywhere soon. But however, I mean, you find that once the BRIC begins to establish itself, then they will make inroads into the US currency being the world currency. But they have a long way to go. I mean, and just like the US, it being the currency of choice, it did not overnight. It took decades. So not saying that the BRICS will take decades, because with technology, things is moving like, with AI, everything is moving like in as a quint. But as it stands right now, I mean, the US is not going anywhere.